We know that TFSA is a tax advantage account in Canada. But what if I told you that that account you think that is 100% safe can actually be weaponized against you by the CRA? And please, this is not to scare you, but to bring awareness to you and to share with you what I learned. Because one wrong move could turn that your tax-free gains into a punitive tax bill. So don't skip ahead, because the third red flag is sneaky, it is hidden, and affects almost everyone that invests. So today I'll be revealing what CRA considers a red flag in your TFSA, where most people trip up even unintentionally, and the strategies that let you keep your TFSA account tax-free forever. So red flag number 1 is turning your TFSA into a business. And you might want to argue that you're not doing business in your TFSA, but there are people that think it's smart to, buy and sell their investments frequently in their TFSA, acting as if it's a trader's account. And you might think that as long as the gains are inside the TFSA, it's all good. But the CRA disagrees, because they considers it as a business. And you know that gains from business activities are taxed. So even though it's a tax advantage account, the CRA will tax it, because the CRA can claim that you're using your TFSA improperly. So the point here is, if your activity in your TFSA account, looks like you're actively trading or doing short-term flipping, the CRA will consider it as a business. But the normal investing, like passive investing, long-term holds, rebalancing your stocks and ETFs, are generally safe. What you can do is to use a non-registered account for your active trades. Use your TFSA for investments to be hold, not fleet. Not that you cannot sell your investments anytime you want, but don't do it too often. So please, I want you to check your TFSA investment account, to find out if there's any of your activity that's already triggering business behavior. So red flag number 2 is over contribution and recontribution limits. Now, when it comes to over contribution with TFSA, it is so easy to fall into this trap, because there's contribution limits yearly. And of course, there should be contribution limit, because if there's no contribution limit, we will all put our money in our TFSA and never pay tax. But the government still wants us to pay tax, right? And over contribution comes with a penalty of 1% interest on the amount you over contributed. And you pay this penalty every month until you remove the excess amount. So let's say your contribution limit is $7,000 for the year, and you contributed $10,000. So the government is going to tax you 1% of $3,000 every month, which is $30, until you withdraw that excess $3,000. And trust me, this really adds up. Now, these are some of the things that can confuse you, and before you know it, you have over contributed. Number 1 is having different TFSA accounts, which is not a problem, but the problem is for you to be able to track the amount you have, the amount you have contributed in each of these accounts, so you don't exceed your contribution limits. The second red flag is withdrawing money from your TFSA and recontributing. Now, this can be very tricky, so please, let's break it down. Let's say you have a contribution limit of $7,000. and you have maxed out that $7,000. That is, you have contributed $7,000 into your TFSA. And then you want to withdraw some money, and then you withdraw $5,000 from your TFSA account. You are not supposed to deposit that $5,000 back into your TFSA account. If you do so, you are considered to have over-contributed $5,000, and the penalty will come knocking at your door. You know, CRA doesn't joke, right? But let's say you have contributed $5,000 and then you have $2,000, remaining for that year to contribute. Now, if you withdraw $5,000 from that your TFSA account, you can only deposit $2,000 back into your TFSA account. I don't know if you get it. Like, let's say you have $7,000 at your contribution limit. and then you have contributed $5,000. Now you have a balance of $2,000 left for you to, to be considered as you have maxed out that contribution limit for the year. Now, you withdraw that $5,000 out of your TFSA account. If you want to deposit back money into that your TFSA account, you can only deposit $2,000 to make it $7,000. You cannot deposit that $5,000 back. If you do, you are considered to have over-contributed. You only gain contribution room the following year. So you have to be patient and then get a new contribution room and then continue contributing. So you really need to keep record of your contributions, your withdrawals, and your recontribution. Don't let a simple mistake cost you thousands in penalties. Remember also that if you under-contribute, let's say your contribution limit for the year is $7,000 and you contributed $5,000, leaving you with $2,000. The following year, the $2,000 balance will be added to your new contribution room limit. Let's say $7,000 for the new and then $2,000 for the balance. That's $9,000. So leaving you with $9,000 available contribution room limit. So please take notes. Red flag number 3 is prohibited or non-qualified investments. So there are investments that are prohibited or disqualified. Example is any investment holdings that connects to you or your family business. Also, unlisted private equity. So CRA frowns at this because they see it as you taking advantage of your TFSA and using your TFSA improperly. And they can tax your gains harshly, 50% or sometimes 100% penalties in extreme cases. So if an investment becomes disqualified, you have to dispose it or you risk penalties. Investments like ETFs, public stocks, mutual funds are safe for TFSA. So please log into your TFSA account and check if you are acting like a day trader with your investments. Also check if you have over-contributed and withdraw the excess amount immediately. Also make sure that none of your investment holdings is connected to you or your family's company or companies, because that is exploiting advantage rules. You can invest with confidence, you can safeguard your gains, and sleep peacefully if you don't overlook these rules. You don't have to spend years building your tax-free gains in your TFSA just to lose them all, or worse, owe penalties. That should not be your story. So please, if you find this video helpful, hit the like button, subscribe if you haven't for more valuable videos like this. Please drop me a comment in the comment section. I read all your comments, and share with us which red flag worried you the most. And until next time, goodbye.